FannieMae.com. That's our business-to-business website where you'll find all of our updates, all of our release notes, and you can just simply put in the search bar there, Community Seconds, you'll get a wealth of information on what we allow. And actually there's a checklist, so you can analyze the features of the Community Second to make sure it meets our guidelines. Let's see, 30-year fixed rate interest-only mortgages are still allowed. 5/1 ARM interest only is still allowed. 3 to 4 unit properties are still allowed. Cash out refinances on 2-unit primary residences are still allowed. Second homes, cash out refinance transactions on investment properties are still allowed. And investment properties with LTVs over 80 are still allowed. Of course, there are some pricing implications for a lot of these and some LTV restrictions. For those that are using Desktop Underwriter, it's real easy. Put it in there. It says, excuse me. If it says ineligible, then it doesn't fit. These are the ineligible products. It's easier to talk about those that are eligible than those that aren't eligible, but here they are, balloons. We've never done them, never will. 6/1 ARMs, 1-year ARMs, 3 ARMs with 5.25 caps. We usually look for 6.2 caps on these type of products. Let's see. Fixed rate, I'm just seeing what are the big ones here. Of course, anything with a refer with caution, we're not looking at those. Oh, here's an important thing. We talked about expanded approval earlier. Expanded approval used to have this little feature tied to it called the timely payment reward feature. I'll talk briefly on it because we're retiring the timely payment reward feature. Basically, it was if a borrower was expanded approval and had like a level 2 or level 3, so more of a serious credit problem. We gave them an opportunity if they made 24 consecutive timely payments, we would automatically reduce their interest rate. We didn't get a lot of traction with that program. For our larger customers who did offer it, it was a servicing nightmare for them because they'd have to monitor the product just to make sure the payments were on time, and it really became an issue for servicers. So we're retiring that functionality of the product. Here we go. My Community Mortgage, these are the credit. See, I was wrong with credit scores again. I knew I'd get to it once I got to it. 580 is our minimum credit score, period. For My Community Mortgage, for 1 and 2 unit properties, we are looking for a 640. For 3 to 4 unit properties, we are looking for a 680. Your LTVs, you see here, with traditional credit, we are looking at a 97%. Non-traditional credit, since it can't go through Desktop Underwriter, you are capped at our manual guidelines. So 95% is going to be your maximum loan to value if you're doing a manual underwrite or non-traditional credit. The real key with Desktop Underwriter is Desktop Underwriter is the only way you can go above a 95% LTV with a Fannie Mae product. If there's anything you're doing a manual underwrite, it's automatically capped at 95. But if you want to get to 97, like use the Flex product, go to 97 on My Community Mortgage. It has to be done through Desktop Underwriter. All right, risk factors, things that we look at by Desktop Underwriter. Credit history, of course, delinquent accounts, loan purpose, mortgage accounts, revolving credit utilization if somebody's a heavy user of revolving debt, public records, foreclosures, collections. Some of the non-credit factors that we look at would be the loan to value, reserves, the loan purpose, if it's a purchase versus a cash out refi. We like purchases better than cash out refis. Loan term. We like 15 years better than we like 30 years, less exposure. Loan type, we like fixed rate products a little bit more than ARMs because payments can move on ARMs. Occupancy type, well, this is kind of an easy one. We like people to live in the house that they're buying a little bit more than we like people buying investment properties. Because typically people they'll more easily, is that even a word? They'll walk away from an investment property before they walk away from their primary residence. Total expense ratio, property type, and whether a co-borrower is present or not. Here's a big factor here. This first bullet point really talks to, I said the change in philosophy from loss severity to keeping people in homes. We no longer look at mortgage insurance as a risk factor for high LTV loans. Before you might see a loan that has a 75% loan to value get treated with less favor than a loan that might have an 85% loan to value because that mortgage insurance was present. You're not going to see that anymore. Oh, this is a big one too. In Desktop Underwriter for years, self-employed borrowers got hit with an extra ding because they're self-employed. We took away that hit for self-employment, so self-employed borrowers are treated the same as any other borrower now in desktop underwriting.
Would you like that? Are you going to bring Stated back? I'm scared.
Stated is officially dead. Come the end of the year.
$12 a year. What can you, in their car?
We're letting people who still have it in their contract, they've actually stopped doing it. It's no longer going to be in contracts after the end of this year. We're just doing a little bit of pipeline relief for customers who still have some of that sitting around and hasn't sold it yet. But the only, and we kind of talked about this before the session started, Desktop Underwriter does have a feature for a strong enough borrower where only a verbal verification of employment is required. That's as close as we're getting to it.
Can you tell me what those things are?
No, because it's the overall analytics of the file. So it might be a low LTV, high credit score, good reserves. There's no exact way to tell you when that message is going to fire. It's all those different factors that you see here that are going to determine if you see that message.
Are there any rate adjustments for self-employment?
No rate adjustments. Oh, that's a great question. There are no interest rate adjustments for self-employment, nor are there any loan level price adjustments.
How does a self-employed person accrue discount from the 1040s?
Tax returns, there are 1040s, there are partnership returns if they have those, corporate returns if they have those. Desktop Underwriter actually, depending on the risk of that transaction, will tell you the level of documentation you'll need for self-employed borrowers. If you look at that level of documentation that it asks for, and you still can't come up with it, then you go to a deeper level of documentation to come up with it. All right. So risk factors, again, reviewing how they are. We have a little sliding chart here, less risk, more risk. So right down the middle is, that's the line. So less risk, we're looking at credit history, older credit history, obviously. It's been established for a while. Right, moderate risk, you're seeing newly opened accounts. They are still making their payments as agreed. More risk, newer, recently opened accounts and not making the payments on. Not making the payments, that's a risk, believe it or not. Delinquent accounts from no late payments all the way to history of paying late on their mortgage. And then mortgage accounts, history of mortgage obligations is of less risk. No mortgage history or no mortgage obligation would be of greater risk on that scale. Question?
Are you still taking into consideration, like if they got collection with medical, is there still a certain amount that you're not going to look at?
Yes, there is. We have 3 different guidelines as it relates to collection accounts. DU will always tell you the right one. We'll start with the standard NDU is if you have collections from charge-offs, if they exceed $5,000, you have to pay them. The next level would be if you're doing a manual underwrite or investment properties, it's $250 per occurrence and the overall cap of $1,000. And what's number 3?
The medical collection.
Yeah, oh wait a minute, actually number 3 is we no longer require the payoff of collections. That's the highest one, you'll see that on DU. The next level would be if you, the $5,000, anything greater than that needs to be satisfied. But again, that's all in Desktop Underwriter and you'll get that told in your recommendations that you get that.
What's the maximum number of loans for an investor?
That question came up last time. Was it 9 or 10? Or we removed it?
I thought it was like 4 or 5.
The investors weren't sure. It used to be 9 finance properties on Fannie Mae guidelines, and then we got rid of that, and then investors came back and put their own overlay.
Right. It was like 4.
Oh, I remember that one.
It was like 4.
And then again, as we're looking at those credit factors, revolving credit, lower usage, less risk, higher usage.